Okay, hello and welcome everyone to this Intro to Financial Accounting webinar. My name is Jim Bersicki. I am a senior instructor here at Penn Foster, and I've been with them now 14 or 15 years. And previous to that, I have my degree in accounting. I worked for a regional accounting firm. I installed accounting software to mid-sized businesses. Um, and my career really, has only, I was a bookkeeper for many years before that and before I became an accountant. But I've been in the accounting field now, over 20 years. So this webinar is going to be about 1 hour long, and it's kind of like a free-for-all, all right? It's intended to be an introduction to financial accounting. And even though we'll have a Q&A, question and answer session as the last thing, if you have a question as we're going along, feel free to type it into the chat box, and as I'm watching it, I'll try to answer those questions so that so it's not like, oh, let me go through all of this theory and then the very last thing. No, I'll try to field your questions as we go along here. And as I said, this here is an introduction to financial accounting, and it's covering the first 3 chapters of the textbook, which basically is about bookkeeping. All right, and I'll get to that in just a little bit more. Okay, but as you can see on this slide here, I wrote as an introduction videos on the student community, and then memorization versus understanding. So let me jump over to the student community because I want to show you something here. And let me find it here. Okay, here we go. Okay, what I did is I jumped over to the student community. And to get to the student community, you could do it one of 2 ways. And the first way is if you log into your Penn Foster account, on your home page in the upper right hand corner, there is a purple button that says community. And if you click on it, it should take you out to the student community. Now, sometimes you'll come right to this page that you're looking at on the screen, or you might end up with a login page where you'd have to log in. All right. I personally don't like doing it that way because if I had to log in, I'd have to create a new login and so on and so forth. So what I recommend that you do right now, and I'll give you a little bit of time, is to, in the upper right hand corner here, you see the web address, okay? And I'm actually going to do it on the screen so that you can see see how to get to what I want you to look at. So the web address here is http, and that's a colon, and then // community.pennfoster.edu /community/academic-groups. So if you have a pencil and paper, and I'm going to repeat this again. Okay, you're not, okay, I'm seeing that Brian isn't seeing anything but my intro page. Okay. Let me see what as I'm watching the audience view, I'm actually showing my Penn Foster student community here. So let's see. Mic keeps cutting out every once in a while. Okay. All right, these are all technical issues that I have to get accustomed to, so just bear with me. Hopefully I will keep the microphone in a manner that doesn't cut out so much. Brian, can you still see are you still looking at the intro page, or do you see the community page? Go ahead and type it in the chat box. Intro page only. Okay, well then let me do it this way. I'm going to stop something here, okay, and let me show the application. My Google Chrome. Okay, that's my Google Chrome. No, I don't want that. Let me go there. Okay. Sorry for the technical glitch here. I'm trying to, Brian says he's not seeing, he's only seeing the introduction page. Is everyone else seeing the student community? Go ahead and just type in yes if you can see the student community. It actually says academic groups. Okay, since other people are seeing that page, then Brian, I don't know what that might be doing for you. That's something on your end because everyone else is seeing it. So go ahead and maybe start the application over. That's not something that I'm going to be able to control. All right, so I'm going to give the web address again here, so everybody write it down. And again, you can get there by clicking on the community button from your home page. But the web address is http://community.penfoster.edu/academic-groups. All right, so let me also do something else here. Okay, I just changed to my PowerPoint slide. And in the PowerPoint slide, what I'm going to do is I'm going to type in that web address, http://community.penfoster.edu/ let me see, let me go back to community academic groups. Okay. The word community /academic-groups and then hit enter. Okay, so this here is the web address in order to get out to the student community. http://community.penfoster.edu/community/academic-groups. Lori asked if you'll receive a copy of your presentation. What I'm intending to do is I'm recording this, so I will have this recording posted up on the community, and you'll see what I mean in just a moment, okay? All right, so I hope everyone has that address, that web address copied, right? Because now I'm gonna actually go out to the student community, and here's what we're looking at. Now, if you come over here to the words academic groups, and as you see, as I hovered over it, it gave a drop-down list, but I want you to click on the words academic groups, okay? And when you click on the words academic groups, it'll give you the groups down here on the left-hand side of the page, and you see the words automotive and motorcycle, and then you see business. I want you to click on the business group, and when you do, it takes you into the business in the academic group. So this is the business group. This is the group that's for all of the business curriculums. Not everybody likes coming out to the student community. It's intended to be a social area. However, we did create this, we're putting these videos, and you'll see what I mean in a second, out here on the business group so that everyone has access to it, easy access to it. And down the left-hand side, you'll see it says here financial accounting. Click on the words see more, and this will take you into the financial accounting section of the business group. Now, on this page, what we have here is blank forms so that if you're in your studies or you're doing a project or whatever have you, or even in your own personal life, if you need blank forms, you can come here and save the PDFs, because these are the more commonly used forms. But we also have additional videos, all right? And this is a work in progress right at the moment. As you scroll down and look at these, the information here, you'll see Introduction to Financial Accounting and Bookkeeping. These videos were created in order to create a framework in your mind, all right, in order to be able to associate the information. Whenever you have to learn something brand new and you don't know anything about it, it's always a struggle because it's new information. However, if you can associate information, then the learning becomes a lot easier. So what we did was we created these here framework videos in order to present the information. Now, you're not expected to learn it, but by seeing it, you'll have a better idea as to what's going on, so that when you are actually working in the textbook, you'll go, oh, I remember that. Oh, I got that. Okay, and now you'll be able to associate it a little bit better. And that's sort of like the same thing with the purpose of this webinar, is to just present the information, and so that you'll be a little bit more familiar with it. And then when you're actually doing the work, you'll have a better idea as to, oh, I remember seeing that. Oh, that makes sense to me now. As you can see, as we scroll down here, we have textbook, all right, and that's the textbook you're using. And then what this is going to be is done by chapter. So for chapter 1, you can see that we have some theory videos. Now, realize that these videos are not a replacement for reading the textbook. I mean, you're assigned and you're responsible for what is in the textbook. However, the theory videos go into another way of looking at things. I'm actually the one who created the videos, and I also bring my own knowledge and my experience into play to try to be able to explain the concepts a little bit better and make it a little bit easier. You'll also see here additional non-Penn Foster YouTube videos. Okay, Matt Fisher 64 out on YouTube, I assume is a teacher, and he was teaching accounting, and he created some YouTube videos as if he was in a classroom, and he has a camera, and he's videoing himself in front of a whiteboard explaining these different topics. So if you're having trouble with, say, financial statements, go out and watch that particular video, and all you need to do is just click on the link. Then we have assigned exercise problems and their solutions. Okay, here I've worked out all of the short exercises, the exercise group B and the problems group B. Right? These here, I work these out as if I was a student. Okay, so if you're doing the homework problems, you're assigned certain problems to do. Work them out. See if see when you get finished, look at the solution and see if your solution matches. If it doesn't match, then try to figure out what you did wrong. And if you still can't figure out what you did wrong, then you come out to the video and watch me actually work out the video and work out the problem on video, so that you can get a better idea as to how to work out the problem. So, if you if you had a problem with this short exercise, and I'm just going to pick S1-14 here. Okay, see, it just took me to this YouTube video, and as you can see, the problem is on the screen, and you also see my scribblings from when I'm working it out. And so you can watch the video and understand what I'm getting at. And if you still don't understand it after watching the video, then there's two things, two possible things that you're having a problem with. One, it's you're not understanding the concepts, okay? And two, it's an application thing. If you're not understanding the concepts, watch the videos again. And if you're still not getting it, feel free to contact an instructor either via email or telephone, right? But our job is to help you understand the material if you don't. So don't be bashful about contacting us. I mean, that's what we're here for. So as you can see, I had chapter 1, and then We have chapter 2, again in the same format, theory videos, the Matt Fisher videos, and then the worked out homework problems. And right now I'm working on chapter 3. We finished the theory videos. I haven't posted up the Matt Fisher videos, but I'm still working on the homework problems for chapter 3. And lastly here, now realize that I'm not going to just stop with chapter 3. We're just going to keep on going with all of the rest of the chapters in the book. But don't think that you have to watch these videos. I mean, you're not going to take the 6 months, to wait for me to put up all of these videos. You need to get through your course material. So, even though you might be at the end of chapter 3, continue working on with your financial accounting, and check back every so often and see if it helps you. It all depends upon where you're at, in the studying the subject matter. Okay, and lastly, for the financial accounting, you have a graded project, all right, to do. And the graded project, the instructions are in the digital study guide on page, I believe it begins on like page 27 or so. But some students have said they don't understand the instructions. So we've created a series of videos that walk through the instructions step by step as to what you need to do to be able to complete the graded project. Okay, so this here is a resource for you, a continuing resource. Okay, like I said, I'm going to add more videos for chapters 4, 5, and so on and so forth as I get an opportunity to. Okay, all right, so I'm going to change the slide and go back to my slides, and I'm going to try to go through basic theory. All right. Now remember, if you're, this is a free-for-all. So if you have a question, I do have a question box open here where, as you type them in, I can actually see what you type in the chat box. So I'll try to respond to them as you type the questions. All right. I just discussed the videos on the student community. Okay, a very good resource. But I also, as an introduction here, I put memorization versus understanding, and the learning is in the doing. The reason why I wrote memorization versus understanding is because a lot of students treat financial accounting as if it's like American history, okay, where they can read the textbook, they can either memorize what's in the textbook. Let's say you have an American history textbook, and chapter 1 is on the American Revolution, chapter 2 is on the War of 1812, and chapter 3 is on the Civil War. What students will do is they'll read chapter 1, memorize some stuff, work through the answers through the test, and then they move on to the War of 1812. And again, they'll memorize, answer the questions, look up the answers, and basically memorize it. And then when they get to chapter 3 in the Civil War, they've kind of forgotten what was about the American Revolution and some of the Civil War. The problem with that is the financial accounting isn't like that. Okay, financial accounting is about understanding concepts. You're not going to be asked for the definitions of things. Okay, you're not going to be asked what the definition of a debit is, and you're not going to be asked what the definition of a normal balance is. Okay, what you're going to have to do is you're going to have to understand the concept and be able to apply that concept to a situation. So the only way you can, fully understand and work through financial accounting is by resigning yourself to the fact that, hey, I have to spend the time thinking about the concepts, knowing how they work together, and then applying them to a particular situation. You can't just read the textbook and then want to go back, see a question or a problem and think that you can go back into the textbook and copy the answers or just change the numbers and be able to get it. No, one concept can have 10 different applications, and the textbooks are created to show only 1 or 2 examples. They show the entire concept, but you can only get a full understanding by doing more and more problems. So that's why doing your homework problems is so important, because if you're not able to do the homework problems, you don't understand something. And sure, you may not get let's say you have 3 problems, and problem 1 you have a difficult time with. okay, and you figure it out. When you do number 2, that doesn't necessarily mean that you still understand the concept, because number 2 is going to be slightly different from number 1, and you're certainly not going to find the answers to number 1 or number 2 from the examples, okay, because they're different situations. So it's, financial accounting is about memorization. It's about understanding and application. It's not about memorization, and the learning is in the doing. Okay, moving on. All right. How did we get to where we're at? Right. Well, in previous accounting education, right, like 5 years ago, you had subjects, Principles of Accounting 1, which was a 1-semester subject, Principles of Accounting 2, which was another semester, and Managerial Accounting, which was a 3rd semester. But due to the advent of the computers, all right, the powers that be decided that they wanted to combine Principles of Accounting 1 and 2 together and call it Financial Accounting. And Principles of Accounting 1 and 2 basically made you a very, very, very good bookkeeper. All right, okay. But because we have computer software and stuff like that nowadays, the governing bodies decided that, well, since you're in financial accounting, we don't need to teach bookkeeping, okay? And therefore, we're going to just jump in with financial accounting. And the problem with that is that the authors had written textbooks with only one chapter that explained bookkeeping. Basically, here's the definition of a debit, credit, normal balance, asset, liability, and then they jumped right into the financial accounting aspect of it. And the problem with that is that students don't learn the underlying concepts. Now, granted, an accountant generally doesn't do bookkeeping, even though I know a lot of accountants who do bookkeeping. But they kind of like want to pick up right where bookkeeping leaves off, and they struggle because they don't know how to make journal entries, or they haven't made enough of them in order to be able to make journal entries that they've never seen before. Okay, so we managed to find a textbook that has, and that's the one you're using, that has 3 chapters, which kind of like covers the gamut of bookkeeping. Now, understand that there's 2 sets of people that work on books, on the books of accounting. The heart of the books of accounting is called the general ledger, okay? And we have bookkeepers who do the data entry, who enter the data onto the books. And then it's the accountant's job to make sure that that information is correct, and then to be able to create your financial statements and do analysis, and depending upon the size of the business, go into even financial advice based upon the situation with the business. So the bookkeepers enter the data, and the accountants then make sure it's right and pick up from there. Okay, so what do our books of accounting look like? All right. Well, think about, let's just take the American history textbook, okay? Let's say, on the cover it says, American history. And when you open it up, you see a chart of accounts. I'm sorry, you see a table of contents. Okay, there we go. Sorry about that. So I picked up my digital pen is what I did, and I kind of messed up the screen sharing. So anyway, I have my digital pen, which I like. All right. Okay, let me see here. Okay, so we have our set of books, and we're looking at American history. Now, when we open up the front cover of the book, and let me just make sure that you're seeing my PowerPoint slide instead of just the introduction. Okay, Yolanda can't see anything. All right, people can see. Click the stop screen sharing. No, all right. Pause. Okay, people can't see your screen. I have it. Oh, there we go. Okay, so now, okay, there we go. Like I said, this is my first time using the webinar software, and I did the same thing again. Sorry about that. Okay, sorry about this. I'm having a little bit of a difficult time. Okay, people can see me now. All right. Sorry, I can only, get accustomed to this. All right, so back to where, all right, I have a PowerPoint. And on the PowerPoint screen, you should be seeing 3 purple boxes that say chart of accounts, general ledger, and trial balance. Okay, good. All right, so back to our example. We have American history textbook. And when you open up the cover, you have a table of contents. And the table of contents lists the chapters. So chapter 1 would be like the American Revolution. Chapter 2 would be the War of 1812. Chapter 3 would be, the Civil War, so on and so forth. And under each chapter, there's subheadings with a page reference. Okay. And of course, if you go to that page in the book, you'll see that subheading, and then you'll see the paragraphs that pertain to, let's just say, the Boston Tea Party. Well, the books of accounting are pretty much the same thing. The general ledger is the heart of everything. And when we open up our books of accounting, we have a chart of accounts, okay? And the chart of accounts is just like that table of contents, where we have the different chapters. Well, our chapters are called assets, liabilities, equity, revenues, and expenses. And underneath each chapter, you have these subheadings. Well, underneath those categories of accounts, you have the different general ledger accounts, okay? Those chart of accounts represents what is in your general ledger. So every general ledger account, there's a specific one in your general ledger account. Now, when the author is creating the textbook for American history, he has his notes spread out all over the page, and he decides, well, this is going to go in this particular section, and that's going to go in that particular section. Well, all of your information is arranged in your general ledger by account. You're going to see a cash account, accounts receivable, so on and so forth. And of course, we create balances, the total dollar amount in those accounts. So what we then can do from our general ledger is we can create a trial balance. And a trial balance is nothing more than a listing of those accounts that have the balances in those accounts. Okay. Now, the thing about a trial balance is there's different names for them, okay? It all depends upon when you create the trial balance. Like, for example, you can have a beginning trial balance, which is the trial balance that you would create at the beginning of an accounting period. You can have an ending trial balance, which is the one at the end. You can have a pre-adjusted, which is pretty much the same as an ending. And then you can have an adjusted trial balance. So the point being here is that you can have several different trial balances, and it all depends upon the name, and the name determines at what point in time that you're actually creating the trial balance. Okay, next slide. Let me come on down here. Okay, come on. All right, there we go. And let me erase that stuff. Okay. Okay, so we now know that we have a chart of accounts, which is the table of contents for the all of the accounts that are in our general ledger. However, how do we get the information into the general ledger? Well, transactions occur in a business. When you buy something, let's say you buy supplies, or you sell something, you made something and you've sold it. These are transactions that occur in the business. And those transactions have to, we have to be able to capture that information. And the way we do that is by making journal entries. And we put the journal entries in a journal, okay? Now, every business starts with a general journal. All businesses have a general journal. That's the basic foundation for one, all right? And any of the information that gets put into the journal, all right, we post into the ledger accounts. So we're basically rearranging the information, we're transferring the information from our journal into our ledger accounts. Okay. Now, if we have a general journal, and let's just say we have a small business, let's say we have a 4-unit apartment building. Well, we're not going to have that many transactions that occur during the course of a month. So we can put all of those transactions into the general journal and only have one general journal. However, let's say I have a 100-unit apartment building instead. Okay, now I have a lot more transactions. And because I have a lot more transactions, it makes sense to create additional journals, and they're called special journals. Okay, we create additional journals and we group like information together in that particular journal. So let's say we have this 100-unit apartment building, which means we're going to have at least every month 100 transactions where we collect rent. Okay, and then of course we're going to have a lot of expenses where we have to pay for gas and electric and so on and so forth. All right, and maybe I even have a staff that I have to pay payroll. Okay, so what we would do is we can create special journals. GJE represents the general journal, but we might also create a cash receipt journal, CR, which represents receiving anytime we receive cash, we would put it into the cash receipt journal. CD represents cash disbursements. Anytime that we pay money out, pay cash out, we would put it into the cash disbursements journal. And then we can also have a payroll journal. So anytime we pay our employees, we would put those entries into the payroll journal. Now here's the thing, a journal is a journal, okay? And the only reason why you have journals is to capture the information. And as a bookkeeper, it's up to you to decide how you're going to group that information together. Of course, you're going to be guided by the accountant. You're not just going to create any old journal any which way you want. But these are the 4 most common ones. Whether you actually use a payroll journal or not, maybe you only have 2 employees and it's not necessary. So you might put those transactions in your general journal and not use a payroll journal, all right? But maybe you do set up a receipt journal and a disbursements journal. It's all up to you. But the bottom line is that a journal is a journal, and all that's being done is you're recording the transaction, right? Now, here's the rub of it. Let's say I have this payroll journal, okay? And when I'm doing payroll, when we're doing payroll, we obviously we're going to have to, let's say we pay an employee $400 and there's $100 in withholding tax, federal withholding, 50 in state, and 25 in local withholding, but we're also going to pay that person in cash, okay? Well, which journal can I use, all right? Now, Yolanda asked the question, would we put those in separate journals or in one, right? If you have very few transactions that are occurring, you would generally only use a general journal. But a lot of businesses have a lot of transactions, and so therefore they end up creating multiple journals. And if you're doing the books by hand, meaning with pencil and paper, you'd actually keep separate books, one specifically for the general journal, one for the cash receipt, one for the cash disbursements, and one for the payroll journal. However, using a computer system, it automatically puts them in the right place. It's just one great big journal. The computer system doesn't need to separate out different journals because it can handle the volume of data so that when you do some research, it's very easy for the computer to be able to find that specific transaction. But if you're a bookkeeper and you're doing 100 or 1,000 entries a month, it's very difficult for you to be able to find that particular payroll entry on June 5th. Okay, so what you do is you say, okay, because I have so many transactions, I group the like transactions together. So in this case here, if you're looking at the screen, I would have 4 separate journals. And any payroll transactions I have, I would put it into the payroll journal instead of the general journal. Okay, so this way, when I have a question about, oh, payroll, I don't have so much to look through because all of my payroll transactions are grouped together. Okay, I hope that answered your question, Yolanda. All right, but now here's the rub of it. With payroll, as I said, you're paying the employee, you have withholding, and you're also paying cash. Okay, well, if I'm paying cash, can't I put that entry into the cash disbursements journal because I am paying cash? Well, yes, you could. Can I put it into the payroll journal? Yes, you could. Can I put it into the general journal? Yes, you could. Okay, there's no right or wrong to it. All right, for the simple reason that at the end of the accounting period, all of the transactions that are in all of the journals get posted into the general ledger accounts. All the information is rearranged and put into the general ledger accounts. So even though I have the, I could have put that payroll entry into the cash disbursements journal, well, it doesn't matter whether it was in the cash disbursements journal or the payroll journal because the information gets put into the ledger accounts. Now, you don't want to do that willy-nilly, okay? For the simple reason that if I'm an accountant and I come into the business and I'm looking at the ledger accounts and I want to see this particular transaction, okay, well, you should know that you put it into the payroll journal, okay? I mean, if I'm going to look for it, I'm going to look for it in a payroll journal. I wouldn't expect to find it in the cash disbursements journal, okay? So, there is some semblance of order. It's sort of like using a filing cabinet. One drawer is for, general journal entries, the second drawer is for cash receipts, the third one for cash disbursements, and the bottom drawer for anything that has to do with payroll, okay? So journal entries are put into journals and then posted into our ledger accounts. Shelby asked, how do you know how much withholding to take out? Okay, that's a payroll question, and that I don't know where you're at as far as your education is concerned, but payroll was covered in payroll was covered in Math for Business and Finance. Okay, that's subject. Okay, it will be covered later on in the textbook for financial accounting again because payroll is obviously an important concept. As far as withholdings, that's beyond the scope of this particular webinar because we're only talking about accounting. We're not talking about doing payroll. So go back to your Math for Business and Finance book, or like I said, later on in the financial accounting textbook, there is a section on doing payroll, okay? All right, so once all of the information has been posted into the ledger accounts, like I said, that's the heart of the books of accounting. That's when an accountant comes in, that's what they're going to grab. They're going to grab the ledger, okay? And from the balances in those ledger accounts, we create our financial statements. Now, the two most common financial statements are a balance sheet and an income statement, okay? And you can see examples of those in the textbook, all right? But every business has an income statement and every business has a balance sheet, all right? However, other businesses, will create additional financial statements. Another common one is the statement of cash flows, and another one is the statement of retained earnings. Now, those two are optional. They don't have to be created, okay? And they're certainly not the end-all, be-all of the financial statements that can be created. The statement of cash flows is created so that you can track your cash to see what your cash position looks like. Because remember, you have two different bases from which to create your books. One is a cash basis, another one is an accrual basis. Okay, the cash basis, when you're doing books on a cash basis method, you're going to, anytime you have a cash transaction, that's when you enter in the journal entry. Whereas the accrual basis, it takes into consideration things that haven't affected cash just yet, okay? Sort of like an accounts receivable. if I'm going to buy something and I'm only dealing strictly with cash, okay, then I can use the cash basis. And very few businesses actually use the cash basis, only very, very small businesses. But if I have a customer who wants to buy something on account, then all of a sudden I have to start using the accrual basis. So the vast majority of businesses are set up on the accrual basis. And because it's set up on the accrual basis, now all of a sudden, we're not looking at strictly cash, all right? And so the statement of cash flows is created in order to be able to track that cash, all right, to see what our cash position is. The statement of retained earnings is sort of an expansion of the equity section of the balance sheet. Okay, the balance sheet, if you're looking in chapters 1, 2, and 3, you'll see common stock, retained earnings, and dividends. Okay, and the statement of retained earnings, gives more detail as to how, like for example, the retained earnings balance is created. Okay, now of course these statements can get, these are all detailed statements, and they can get exponentially greater. And also too, we can create additional financial statements that aren't on this screen. Like for example, when, let's say you have a manufacturing concern, maybe you build O-rings for jet engines. Well, you have to be able to track what's going on in that manufacturing plant. So there's a lot of additional financial statements that can be created. So just realize that, every business has a balance sheet and an income statement. But beyond that, the two more common ones that are created are the statement of retained earnings and the statement of cash flows. But there's many others that can be created. All right. Okay, so let's go down to the next slide. All right. So let's talk about the accounting cycle. All right. Now, I explained what a trial balance was, which is nothing more than a listing of the ledger accounts and the balances in the accounts. And the way the accounting cycle works, it's very circular, okay? And actually in your textbook, there was, I believe at the end of chapter 2, I'm quickly skimming the pages, actually on page 72 in your textbook, and you can look at that for yourself on your own time, but it shows it in a circular format, okay? So you start out with the beginning balances in your ledger accounts. So then you have transactions and you make the journal entries. From the journal entries, you have to post them into the ledger accounts. Now, step number 4 here, I show as a worksheet. And in the videos on the student community, I explain that even though the information is presented in the textbook in 3 brief chapters, they don't show everything that I think is important. And I think one of the important things is being able to work with a worksheet. So if you watch the theory videos on the student community, I go a little bit more in depth on what the worksheet is about. But just realize that the worksheet is used by accountants at the end of the accounting period, okay? Once all the transactions have been posted to the ledger accounts, we can create ourselves another trial balance, and that's called a pre-adjusted trial balance. The reason why it's called pre-adjusted is because these are the balances in the accounts that are there before we make any adjustments. Okay, we don't know if that information is accurate or not. Okay, so we have to go through that information and make correcting entries or make additional adjusting entries, which is what adjustments are. Okay, we make adjusting journal entries and then we post them to the general ledger account. Now, I'm going to go back to the pen here, and hopefully it doesn't screw things up too much. So we have our adjustments, and they're nothing more than journal entries also, okay? And generally, we put the adjustments in the general journal. But since they're in a journal, they get posted to the ledger accounts, okay, into the general ledger. And once we do that, now we have an adjusted trial balance. Okay. The adjusted trial balance are the figures that we say are going to be absolutely correct. They're the numbers we want in order to be able to create our financial statements. So that when we're looking at our balance sheet and our income statement, we know that that information is accurate. If we looked at the adjusted trial balance and we found an error, well, then we'd have to come back to our adjustments and make them again, post to the ledger accounts again, and then create a new adjusted trial balance. And we keep doing that until we're absolutely certain of the balances in those accounts, because from the trial balance, we can create our financial statements. Once the financial statements are created, well, we have to prepare our books for the next accounting period. So we have to make closing entries. And again, these are journal entries, okay? And what they do is they take the information that you have in your revenue accounts, in your expense accounts, and your dividend accounts, and takes those balances and move them into our retained earnings account, okay? And when we do that, that brings our accounting equation back into balance, right? So let's just back up one quick second and let's talk about what the accounting equation is. Well, the accounting equation is our assets, which equal our liabilities, plus our equity, okay? And they're shown on the balance sheet. Our revenues, and our expenses are shown on the income statement. So if we have a journal entry, and as long as we're making journal entries to assets, liabilities, and equity accounts, our accounting equation stays in the balance. But as soon as we make an entry where we affect our revenue or our expense account, it throws our accounting equation out of balance. I mean, think about it. Let's just say we have $10 that somebody invested in the business, okay? Well, that means we get cash, which is an asset, and $10 for equity, so our accounting equation stays in balance. But let's say we pay out $3, okay, so now we only have $7 left underneath assets. We pay out $3 as an expense, okay? Well, when we do that, we're making an entry to our assets and to our expenses, and notice our accounting equation is no longer into balance, right? So that's why we have to make closing entries so that we can pull this $3 back over into our equity account, which would make our equity 7, and our accounting equation stays back in the balance, right? So once we've made the closing entries, then we're able to, we have to post them to our ledger accounts, and we create a post-closing trial balance. Now the post-closing trial balance, is the end of the accounting cycle. And whatever we have on our post-closing trial balance goes full circle, and it becomes number 1 again, our beginning balances for the next accounting period. Okay, everybody got that so far? I mean, I know I'm talking here and presenting this information. Let me erase that. So I hope everybody understood that process. Okay, come on, go back up. There we go. As circular. Okay, so and that's basically all that the entire accounting cycle is, and that's what your books are. You start out with beginning balances. Let me get that pen again. We start out here with beginning balances in our general ledger accounts. We make journal entries. We post them to our ledger accounts. And once they're posted to our ledger accounts, we then start going through the end of period accounting process. And part of that process is starting out with a pre-adjusted trial balance. Now, a lot of students at this point in time, especially when they're doing their graded project, they'll say, oh, my debits do not equal my credits. And we know that your debits have to equal your credits. And the only thing that I can tell them is that, you have to go back through all of your work until you find the mistake, all right? When you're making your journal entries, your debits have to equal your credits. Otherwise, your journal entry is not correct. And when you have your debits equal your credits, when you post them into your general ledger accounts, all you're doing is just rearranging that information, okay? So, the entry that you had, remember every journal entry has at least 2 line items. One is a debit and one is a credit. I mean, you can have more, but to keep things simple, you have 2 of them. Well, when I take this debit to whatever account that is, I have to make sure that when I'm here in my general ledger, all right, under that account, let's just say it's a cash account, okay, that I'm putting that amount, whatever it is, on the debit side of the cash account, okay? Let's just say it's $100, okay? So I moved that information to the ledger account, and the credit, let's say that's to sales revenue, all right, sales revenue. I have to make sure that when I'm in the revenue account, that on the credit side, I have to write the $100, okay? Or let's say that rent was $110. Well, I have to make, $1,100. I have to make sure that I'm not writing 1,010, okay, transposing the numbers. So if you make a journal entry and your debit equaled your credit, and you go down through all of your journal entries and you make absolutely sure that the debits equal the credits and that the numbers are correct, all right, then it's just a matter of transferring the information into your ledger accounts, okay? Once they're in your ledger accounts, then you have to do math, okay, in order to get the balances in the accounts. Well, in doing the math, a lot of students use a handheld calculator. Don't, all right? Use either a printer calculator or use an Excel spreadsheet, okay? And when you're using the Excel spreadsheet, make sure you run the numbers at least 3 times, okay? Students will just input the numbers once and have a total, okay? And then think that's the correct amount. Well, what if they input the information wrong, okay? Well, then that total is going to be wrong. And the reason why I say 3 times is, let's say I entered this information and I made this mistake 1 time, all right? Now, I don't know if it's right or wrong, but when I go to enter it a second time, I might come up with the same total, right? But your mind has a way of saying, okay, these are the numbers, and I entered it again exactly the same way. Well, maybe I'm entering it in incorrectly a second time, okay? Even though they're the same, all right, same totals, maybe both are wrong. And that's why I suggest running it a 3rd time, because it's highly unlikely, or less probable, that I would rather say, that you would make the same mistake 3 times. So when you run it a 3rd time and you see you have a different amount, okay, now what you can do is you go and you say, okay, well, is this number the same as this number, is the same as this number? And you start looking at them in order to see where you made your mistake, so that you can correct it and know what your proper amount should be, okay? And if you do that, when you're doing the balances in the accounts, going to erase here, when you're doing the balances in the accounts, right, now you know your balances are correct, right? But you're going to create a trial balance. Well, all you're doing with the trial balances is you're moving that information to a different piece of paper. Now, the computer does this easy for you, but by doing it by hand, you might write the wrong amount on the wrong side, something like that, okay? So you have to make sure that you transfer the information correctly on your trial balance. And of course, on your trial balance, you're going to have a debit column and you're going to have a credit column. And you're going to have to add up the numbers and get an amount for your debit, right? Now, again, add those numbers up 3 times. It seems like it's a lot of work, but you know what? In the workplace, that's what I would do, okay? Because I need to be accurate. If you're not accurate, you're not going to have a job very long. It's not to say you can't make mistakes. It's just that you should, your percentage of mistakes should be very low. If you're making 25% mistakes in the workplace, you're not going to have a job, okay? So add up the numbers 3 times and you'll have a debit amount. But don't automatically think that whatever that amount is what I should make it for my credit. And I see a lot of students do that because they don't want to take the time to add up the credits. You have to add up the credits 3 times and you should come out with the same number. If not, there's something wrong, right? So debits always must equal credits, and how you go about finding those, your mistake, if it doesn't equal, that's up to you. On the student community, in the Intro to Business and the Intro to Accounting and Bookkeeping section, there is a procedure, a Word document, and 3 videos that says debits do not equal credits. Okay, and that's a procedure I developed for myself in order to be able to find my mistakes when I'm looking at my books. Basically, I'm making copies of my work and using a highlighter in order to make absolutely sure that what I wrote is the right amounts in the right spots. So the only other question I have is, am I doing the math correctly? And that's why I said run the numbers 3 times. And if you use that procedure, you should be able to find, why your debits don't equal your credits. Okay. All right. So Brian is asking, where was that found? Let me change my pen here, and I'm going to go back up to the slides here. Okay, and let me erase this. Okay. All right. Here is, let me get the highlighter here. Here is that web address. Okay, ooh, right there. That looks ugly. All right, so let me go back to the pen. Here's the web address, and I'm going to leave this on the screen here, okay, so that you can write this down, okay? That's http://community.penfoster.edu/community/academic-groups. And what you want to do is, when you go to that web page, remember this is the student community, you want to click on the words academic groups, and that will give you a listing of the groups down the left-hand side of the page. You'll see automotive and motorcycle, and then you'll see business group. So you'll click on business, right? Click on the word business, and that will take you to the business group. Under the business group, on the left-hand side of the page, you'll see how to study. You'll see math, and then you'll see financial accounting. Sorry about the pen here. Right. And you'll see the words see more, and you click on the word see more, and that will take you into the financial accounting section. And again, in the financial accounting section, you'll see videos, you'll see blank forms first, then you'll see Introduction to Accounting and Bookkeeping, which has the framework videos, and at the very bottom of that section, you'll see the videos for the debits not equaling credits, okay? There's a Word document there. I think it's the 4th line up from the bottom under that section that you can print out. And then there's 3 videos, which is my going at, trying to present, showing what it looks like in actually using that process, okay? All right, good. All right, so, it's almost 2 o'clock here, and, if anybody has any other questions, I'll be more than, happy to entertain them and, answer them for you. And if not, then we'll be done with the webinar, and I hope you've got something out of it. So if anybody has any questions, go ahead and type it into the chat box, there. Okay. All right. Elizabeth says thanks. Same Lori. I am planning to, this here is an experiment, as I said. I don't know what we're going to do going forward. I know that we are going to continue to have more webinars, and so these are optional. They don't count for anything. This is only just an additional learning resource for you as a student, in order to be able to understand financial accounting. I am going to try to vary the times and the days so that we can capture, have additional students be able to watch the webinars, and I'm going to be trying to capture different subject matter. So, always be going back to your My Courses page and looking at, watching the webinars for financial accounting and see when there will be new dates and times and new webinars available. Okay, and Yolanda asked what you wrote on there, does that say how to study? Yes, yeah, I just abbreviated to how to study. Forgive the pen and the bad writing. I mean, I am using a digital pen here, but under the business group, it will say on the left-hand side, there's a section called how to study, right? And you might be interested in going and watching those videos because it gives a different take on being able to study, because how you study math is not the same way you study English. It's not the same way you study financial accounting. So you might want to check out those videos. And then the next section is math for business / applications, all right, which most of you probably have already had that subject. So that's not going to be of any use to you. And then you'll see the financial accounting subject. And like I said, there's only 3 chapters so far, but as I go forward, I'm just going to keep on adding content. So depending upon where you're at in your education, like if you're just getting started, well then chapters 1, 2, and 3 are, you're good to go right now, okay? But if you happen to be at the end of chapter 3, then chapters 1, 2, and 3 are only a refresher for you, and you might get done with chapter 4 before I can actually put up the additional information, okay? But it's worth going back and looking at, okay? So if there's no other questions, I thank you for all attending. And I appreciate everybody, thanking me and, giving good comments, okay, about this. Also too, feel free to email us, from your My Courses page. You can click on Contact Us and ask any questions. It's better if you, to contact us if you don't understand something, okay? Because generally the application part of it is due to, when you struggle with doing the homework problems, it's due to you're not understanding a concept, okay? And if you don't understand it, then you're dead in the water. So with that, I thank everyone for attending, and good luck in your studies, and feel free to contact us when you need to, okay? Thanks and have a great day.